From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, welcome to Balance of Power, where the world of politics meets the world of business. I'm David Weston. The story of the moment for the markets and for regulators in Washington is the phenomenon that is GameStop, with the stock way up again today, well over 100% up as some big short sellers get out of the game. For an update, we welcome now co-anchor of What'd You Miss? He is Mr. Romaine Bostick. So, Romaine, give us an update. If you can, it changes moment to moment.
Yeah, moment to moment. You're looking at a board now for our viewers there about a stock that's up basically 1,400% here over the last 20 days. This all really started late, basically last year in December. A lot of retail traders basically decided that some of the short sellers that were involved with this stock were basically not giving enough attention to what they felt was, I guess, more of a long-term bull case for the stock. They basically went into the options market, started buying out-of-the-date call options. This put pressure on the price of the stock itself, and you see it just shot up there. It gets kind of complicated, and we don't need to go into all the details of how it worked out, but the end result was you had big short sellers. Andrew left over at Citron, Melvin Capital and Gabe Plotkin over there, and a couple others that basically had to fold their positions at a significant loss. Andrew Leff said he actually closed this position out at a 100% loss, somewhere when the stock was trading around $90 a share. This is now really a much bigger story, though, Dave, than just about GameStop. This is really about retail traders finding a way to use the options markets to effectively, I guess, manipulate the share price in a way to their favor. Right now, you're talking about other stocks out there that now they've targeted. Costs, a headphone company, shares up 300% on the day. Express, of course, a former retailer out there that used to be very popular, still out there, up 200%. AMC, up 200%. The list goes on, Dave. And at the end of the day, all of these stocks have one thing in common. They're basically stocks that had relatively low float. They had high short interest, and they had the conviction of a lot of retail traders that the share price should be higher, and they were willing to go into the option market to try to facilitate a change in the share price.
So let's be honest, Romaine. There are some people on Wall Street who are not going to cry a lot of tears over short sellers.
No.
I mean, they've caused a lot of grief themselves over the years. But who could get really hurt in this?
Well, right now, I mean, we've asked this question on other programs a lot. Is there sort of systemic risk out there by what's going on? The general consensus right now seems to be no, that the people most at risk are some of the individual traders and groups of individual traders who could potentially lose their shirts in this, and they probably will. That's neither here nor there when it comes to the broader market and I guess to a larger extent the economy. But you've already seen now a report out right now coming on the Bloomberg wire that TD Ameritrade, one of the brokerage platforms, has basically suspended some activity in certain shares of GameStop as well as on AMC. The idea here that by putting trading restrictions on those stocks, you might create a little bit more levity and maybe a little bit more, I guess, what you would call a return to fundamental decisions about whether people should be buying into these stocks or selling.
Actually, even as you're talking, we have a viewer writing and saying, is that okay? Is that legal for them to just stop trading in something? So there's a lot of regulatory questions that we're going to have to address here at some point. But thank you so much to Bloomberg anchor Romaine Bostick. For an analysis of what lies behind what's going on with GameStop and whether real harm could be done to investors or the markets overall, we welcome now Peter Atwater. He's Financial Insights President and also lecturer in economics at William & Mary. So, Peter, thank you so much for being here. Give us a sense of what does lie behind this in your analysis. What's giving rise to this? Why now?
So what we've seen over the past couple of years have been these flash mobs with money, as I call them, where investors, particularly using social media, get together and aim at a single company. You saw this with Tilray, Beyond Meat, just one after the other. And what we've started to see is they move from moving shares to buying options to now buying options and things that are most shorted. And to me, this just reflects on the confidence of the crowd. They've gotten much more strident, much more aggressive, and honestly, they've succeeded at it. So behaviorally, this looks very, very predictable, and it's coming to a head.
At the same time, was there a reduction in the barriers to entry, if I can put it that way, that it's easier for retail traders to get into things like call options? I mean, there was a time that required some sophistication. You have to go through brokers and things like that. Now, I think you can do it online, can't you?
Sure. I mean, the technology has moved with the crowd, but I mean, let's be honest. This has been going on for a long time. You go back and you read financial history, and they talk about the telegraph suddenly causing the market to move more quickly. This is the same thing, but in a 2021 version. People are using accounts online with their iPhones and are trading call options. We've taken it to an extreme.
I want to just interrupt you for 1 second because, particularly for people in the New York area, you want to hear that Governor Cuomo has just lifted a lot of yellow zone restrictions. That includes limits on gathering here in New York City. There was a report earlier today that the numbers of cases of COVID-19 had gone down again. So there's at least some lifting of some of the restrictions in the New York area that our audience in the New York area would want to know about. So, Peter, I want to come back to you now. Let's talk about regulation, because there's various discussion about whether the SEC or someone else should be getting involved. Does this potentially lie afoul of what's going on with the SEC in terms of existing regulation?
I don't know if it runs afoul or not, but as a researcher, I have found that regulators, when they act, react to sentiment. And so I expect that if sentiment becomes too extreme, people become concerned about systemic safety, then you'll see the regulators move in force. And that's what they do. They will close the barn doors at the moment that the animals have already left. They're going to pour water on a fire that was already extinguishing on its own.
And the question, at least in my mind, I think in many people's minds, is do existing regulations really address this? I mean, people have talked about like pump and dump. Certainly there are regulations about that where you really talk a stock up so you can sell it. Or does there need to be a whole new regulatory approach to this, if any at all?
So I expect the regulators will respond to this, after the fact with regulations that try to modernize, and reflect truly what's in place today. But I would think about it almost like Sarbanes-Oxley. It will come well after the crowd has dispersed.
Does it interfere with some of the signals being sent in the marketplace? Those who defend short selling say this is a way of really communicating information in an early stage, at least questions about a company. It really facilitates an effective market functioning. Does this get in the way of that, or is this just that same market signaling on steroids, as it were?
Yeah, I'm in the camp that this is signaling on steroids. I mean, what you have right now is absolute speculation using enormous leverage, targeted where they believe it will be most effective. And I step back and say that only happens, David, near the climax of a confidence cycle, where people are so certain that they're going to win that they bet the ranch in things that have enormous leverage. This is flipping houses, from 2005 on steroids in 2021.
Well, that's one of my questions, actually, because you are a researcher. Looking back through history, whether it's the housing bubble or going back further than that to tulips and South Sea and things like that, are there analogies that would inform us now that might inform where we're going, or is this a one-off?
No, I think that the analogies hold. These tend to be climatic events where the crowd is enormous. It's moving in a manic, very frequent way. I mean, to me, it's less of a bubble than it's a series of one craze right after the other. And those high energy moments tend to happen, just at the peak in the confidence cycle.
Peter, we can't get in the minds of the people who are participating, particularly on Reddit here. But from your research, from your reporting, is this about finances at base, or is it actually about politics or about social norms and a real resistance to sort of some of the institutions we've had, including going all the way back to 2008, and sort of a resentment about the fact that perhaps those in the financial system were not held properly to account?
I sort of look at the evolution of this paradigm, starting with sort of gamesmanship, people going online and using social media to make money almost as a game. Then it became very greed-filled. And now what you're seeing is, I think, a consequence of that K-shaped recovery that I've been talking about for the past year, where there is a jealousy, there's an anger, there's a frustration at the system. And I think the size of the crowd now encompasses that aspect. I mean, don't get me wrong, there's always a stridence to peaks in the market, but this has got anger behind it. And the behavior of the mob in many ways reminds me of what we saw 2 weeks ago at the Capitol. It's a mishmash of a whole lot of people.
Again, we're reaching for analogies because it's so unprecedented, but I also wonder if it has something to do in parallel with some of the cryptocurrency speculation, the extreme volatility there. And is it perhaps a generational issue?
I think, the novice and naive are always last to the party. And so, yeah, I think there's an age factor to it. There's also a facility. These young people, the folks that are, actively involved in this, are far more comfortable, with social media and the tools than our generation or a generation before us. What started though was very futuristic. Bitcoin, Tesla, EVs. It was very oriented towards possibility. What we're seeing today is very aimed at going after companies that everybody was convinced were on their way out in a stretcher. The retailers. These are companies that nobody was expecting to prosper, and the short interest just really has enabled the crowd to catalyze around them.
Okay, Peter, really thank you so much for your insight and your time today. That's Peter Atwater. He is president of Financial Insights. And tune in later for our special called GameStop Phenomenon. That's coming out 5 p.m. Eastern Time here in New York. Coming up, we talk with Sarah House of Wells Fargo about the Fed decision expected at 2 p.m. Eastern Time today. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. For Bloomberg First Word News, we go now to Mark Crumpton.
David, thank you. British Prime Minister Boris Johnson says he understands the concerns of parents, teachers, and students, but he won't reopen schools until it is safe to do so. He told Parliament today it won't be possible to reopen schools next month because not enough data will be available on whether the vaccine program and lockdown are working.
Therefore, be safe to begin the reopening of schools from Monday, the 8th of March, with other economic and social restrictions being removed thereafter as and when the data permits. Then or thereafter, I should say.
Prime Minister Johnson's also tightening UK border rules to require all travelers arriving from virus hotspots to quarantine for 10 days. President Biden will sign a series of executive actions today to combat climate change. Bloomberg has learned they will include temporarily blocking new leases for oil drilling on federal lands. Mr. Biden will call on federal agencies to consider climate change in their decision-making. He'll also reportedly direct U.S. intelligence agencies to consider global warming as they review national security threats. Chief Justice John Roberts' refusal to preside over Donald Trump's second impeachment trial is giving Republicans an opportunity to focus on the Senate's process instead of the specifics of the insurrection charge against the former president. Republicans are seizing on Roberts' absence to question the trial's legitimacy. The increasingly partisan nature of the debate was on display Tuesday when 45 of the Senate's 50 Republicans backed an unsuccessful bid to get the case dismissed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thank you so much, Mark. The Federal Reserve is not expected to make any major waves when it announces its most recent decision this afternoon, but what it says will be watched carefully given the state of the economy, and it's being the first time since President Biden came to office that we've heard, at least officially, from Chair Powell. We welcome now Sarah House, Wells Fargo senior economist. So, Sarah, thank you for being with us. What are you expecting to hear or see from the Federal Reserve today?
Well, as you indicated, I think it'll be a pretty quiet meeting in terms of the headlines. So we're not expecting any policy changes. We're not getting any new economic projections. But I think the important part will really be what's coming out of the press conference. So there's not going to be a lot of changes to the statement, probably just an acknowledgement that we have seen activity slow more recently. But in the press conference, we'll be listening for Powell being pressed on what the impacts of the latest fiscal relief deal that was passed in December means for their outlook, the potential for more fiscal stimulus coming out of Biden's proposal, as well as the latest views on asset purchases and how they're reading some of the increases in inflation expectations. So there's still a lot to watch.
Yeah, there were a little bit of rumblings, I think it's fair to say, when a couple of Fed members sort of suggested there might come a time in the new year when we might talk about some tapering. Do you think they're going to try to really squash that rumor?
I think Powell will try and put the kibosh on that. So we already saw him try and nip it in the bud right before the blackout period, saying that it's not the time to discuss that yet. That echoed some of the comments from Richard Clarida. And so I think you are seeing probably more of the center, at least the drivers of policy on the committee, push off the timing of that discussion. I think the Fed and the center of the FOMC are really focused on waiting until we get to a point where the virus is under more control and they do have more clarity around the outlook. And we're just not there yet. And so in the meantime, they're going to hold the line and I think keep asset purchases at their current pace for at least the calendar year.
So tell us about that outlook you just referred to. I mean, what might we hear about where we are in the recovery? Because there are some indications things are going a little bit better, some that they're really slowing down, particularly in the employment situation, right?
Right. So I think when you look at where we've seen momentum most recently, so we continue to see it weaken, but of course we have some cross currents when we think about what's coming up ahead. So as I mentioned, we had an additional fiscal relief package signed since the Fed last met in December, and so that's going to help in terms of bridge spending and in many ways employment through further an extension through the PPP through the coming months. But at the same time, we're competing against virus mutations, a slower than desired vaccine rollout. And so there's still a lot of cross currents that the Fed is having to deal with. When we step back and look at the overall picture, though, I think that the fundamentals are there for a pretty strong pickup in growth when we get towards the latter part of the year, just given how much stimulus there has been to date, as well as the fact that consumers haven't been able to spend as freely as they would have otherwise. So there's a lot of firepower in terms of the consumer spending picture in the second half of the year that I think still presents a pretty positive medium-term outlook.
Sarah, in your note, you put particular emphasis on housing when it comes to the U.S. economy. Explain where housing is and why you think that's important.
Well, housing really didn't see a full recovery from the last crisis. So in many ways, there's a lot more room to run. And then you throw in the dimensions of the pandemic where we have seen a greater premium on space. Now, some of that might subside to an extent given as people do go back to the office, but we probably won't see people go back to the office to the full extent that they were pre-COVID. And so I still think you're going to see some pretty strong demand for housing, coupled with the fact that the Fed's not planning to raise rates anytime soon. That'll keep mortgage rates low. And you also have some positive demographic effects. So not only are you going to see strong residential investment, but there's going to be some flow through in terms of keeping goods spending rising at a more moderate clip than we've seen throughout the pandemic. But it is going to be some support even as you see consumer spending broadly shift towards services as the year progresses.
Sarah, you mentioned at the very beginning that you expect Jay Powell to maybe refer at least to the stimulus package that has been proposed by President Biden. Give us a sense about the timing on that. You mentioned that we had the $900 billion one that came up just in December. How fast do we need more, or do we really need more to really support the economy going forward to get us over the hump past the pandemic?
So we think the chance of another relief package is better than not. I think in terms of the size of that, it's not going to be nearly as large as the $1.9 trillion that the administration has been asking for. So you still need to get a lot of moderates on board with this, whether even if you were to go through the reconciliation process. We're expecting that they won't have to do that, and we'll probably get a plan sometime around March. So that coincides with the timing that a lot of the unemployment insurance benefits run out. And so I think that's kind of a natural deadline for additional relief. And I think that will help in terms of making sure we get over the hump where, we're not expecting the virus to be, really under control probably until summer. And so I think we will need some additional help to get us to that point in time.
Okay, Sarah, thank you so much for being with us today. That's Sarah Haus of Wells Fargo. And tune into live coverage of the Fed decision and Chairman Powell's news conference. That's coming up at 2 p.m. Eastern Time today. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Former Treasury Secretary and former head of Goldman Sachs, Hank Paulson, and Jim Coulter, co-founder of TPG, are speaking right now on a panel at Bloomberg's The Year Ahead virtual conference. We're going to bring you some of that right now.
Emissions avoided. And there are some really cool mechanisms that TPG has developed to measure that. And I think when you can measure that and show progress, it's easier to get governments to act. And I think if you could come to governments with a big pool of capital, it's easier to get them to act.
And so, Jim, to that point about pool pooling capital. How would you describe the sense of urgency, or maybe more pointedly, the sense of appetite on the part of institutional investors to invest behind this? Is there a comparison that you would make here?
I think the awareness in the institutional investment market is very high. What they're lacking is the solution for how to approach the market. If you look, Jason, into the public market, ESG ETFs, which are largely driven by the E, have been one of the most attractive performing and hottest parts of the sector because people are trying to express this idea. And what I think needs to happen is all parts of the financial world, from green bonds through ETFs, through sector funds like we're talking about, through the venture capital world, all of these need to be enabled and enacted in order to meet this challenge. And it needs to happen relatively quickly. We have to prove the returns. The returns will only be proved in the rearview mirror, as Hank likes to say. But we want to make sure that we make it clear that this will be focused on the market joining with government to help this to happen. And for me, the ability to bring those two together is the two sides of that coin.
So, Hank, go ahead, Hank.
I was going to say, and to do it the way TPG is looking to do it globally. So there can be learning, climate solutions that work in one nation can be used in another. And so the investors in this fund, one of the things we love about it is the investors, we'll have smart investors that will help give us ideas, and we will get, and they will have a window on what's happening around the world. And that will accelerate the progress.
So, Hank, I'd be remiss if I didn't ask you about a potential player in all of this, which is the newly confirmed person who is sitting in your old seat, Treasury Secretary Janet Yellen. I would imagine this is on her to-do list. What role does the Treasury Secretary play here in the United States? What advice would you give Secretary Yellen here?
Well, first of all, we are all really fortunate to have her, someone with her experience, and she's close to the president, and she's got all the
Okay, and on that note, we're going to leave Hank Paulson and Jim Coulter from the Bloomberg Year Ahead Conference talking about their ESG fund, and now about Janet Yellen. Coming up, we're going to have more on GameStop and that furor with Amy Lynch of Frontline Compliance. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. We're in the thick of big tech earnings. Microsoft kicked things off yesterday with a big beat. And today we'll get the latest results from Apple, Tesla, and Facebook. Joining us for a preview is Bloomberg's Emma Chandra. So it is a big tech week, Emma.
It really is a big tech week, David. Some big names expected to make some big news. The titans of Silicon Valley, no less. A lot of them reporting after the bell. You mentioned a number of those names there. Let's start with Tesla, what you might be looking for as you await those Tesla earnings. Of course, with Tesla, we're always looking at the number of vehicles delivered. Now, we already know that the company just missed its 2020 target for vehicle deliveries, falling just 50 vehicles shy of their 500,000 vehicle target. So the focus will immediately be on the future. What can we expect for them in terms of deliveries in 2021? Expectations that it could be more than 800,000, and then into 2022 that it could rise to more than 1 million vehicles being delivered by Tesla. It's the Model Y, that SUV crossover vehicle, that is expected to drive that big increase in deliveries. Turning to another tech titan, of course, let's talk about Apple. Now, Apple is interesting. We could see Apple post its first $100 billion quarter when it posts its earnings. Expectations for a revenue of about $103 billion there. Now, of course, revenues driven by sales of iPhone, but a lot of data there saying that it is the more expensive models that might have driven that big revenue gain, the likes of the iPhone 12. Let's move on to Facebook. Of course, Facebook also reporting after the bell today. For there, you need to look for advertising revenue. That's really the big metric that a lot of company or Facebook watchers really want to see. The expectation that that ad revenue could have risen to around 26% year over year. Now, it looks at Facebook could have been a beneficiary from the pandemic in the sense that we saw more people shop online, a big surge in e-commerce, and that meant that ad budgets were shifted more to the digital side, and that would have been a big beneficiary for Facebook. Now, of course, David, I can't end a hit with you without talking about the other big company stories of the day, and of course, that is GameStop and the likes of AMC. Those breathtaking rallies for those stocks continuing at pace, looking at triple-digit gains in percentage terms for those companies today, of course. And this is even as we're hearing that the short sellers who are being squeezed by this are starting to capitulate, David. So that is a story that we are all watching and continuing to watch.
Yeah, GameStop may not be a tech titan, but it's gotten titanic levels of attention, no question about it. Thank you so much to Emma Chanda for that report on tech. The extraordinary numbers being posted for GameStop are raising a basic question. Can they do that? For a take on what, if anything, existing laws and regulations say about the sort of extreme positioning we're seeing, welcome now Amy Lynch. She is founder of Frontline Compliance, which advises financial services companies on securities law and regulation. Ms. Lynch earlier served with the SEC. So welcome. It's good to have you with us. So what, if any, laws or regulations apply to what we're watching right now? It is certainly an outlying phenomenon.
Hi, David. Thank you for having me on your show today. And yes, this is a very interesting phenomenon we are seeing right now with several of the issuers out there that are being hit by this scheme, and I will call it that. So right now we have a perfect storm occurring. We are seeing Main Street play against Wall Street in a fashion that hasn't happened since the late 1990s. So it did happen once before, back with the dot-com bubble, and we're seeing it again now. So we're seeing the rise of the day traders versus the rise of the shorts. And the regulators, I'm sure, are watching this very closely as we speak. And they have all of the market data available to them to see these transactions. And they will be looking at the short selling. They've got several tools in their toolkit to do that for rules and regulations regarding short sales. And with the new chairman coming in, Gary Gensler, I'm sure he will take a look at that. With his background in derivatives transactions, he is keeping a close eye on this.
So be more specific if you can, Amy. I mean, for example, I don't know much about securities regulation, but you have so-called pump and dump, which, as I understand, is you sort of talk a stock up just so you can sell it at a profit. It's not clear that that's what's going on here, is it?
Well, it is actually a form of that. So you have these traders that are in these chat rooms, and they are purposefully talking up these issuers to later then sell them at a profit. So that is the definition of pump and dump. But the difference here that we are seeing is normally that is a scheme that is being done by some sort of a professional investor who is trying to defraud customers. And in this case, we have retail investors who are trading for themselves, most likely. It will be interesting to see if any of these traders are actually trading for others, and I'm sure the SEC will take a look at that. And also, they're not hiding it. They're saying, this is what we're doing. This is why we're doing it. We're going after the shorts and trying to squeeze them out of their trades. So there's no false information necessarily being spread via these chat rooms, but it does hint of fraud nonetheless.
Well, that was exactly my question, because my understanding when I took securities law way back in the old ages, basically the entire foundation was on disclosure and let the investors decide. I'm not aware, I haven't spent a lot of time on Reddit, but I'm not aware of a lot of material misrepresentations about GameStop. They're basically saying, we just want to buy this up to really hurt the short sellers. That's not a misrepresentation. So can the law really go after that?
Well, that's a gray area. So if the intent is to harm other investors, and it seems like it is, I think we'll have to see what the end result is after this. And maybe in a few months we'll know, because some smaller hedge fund entities out there that have trading strategies to short retail issuers could be put out of business by this activity. So in a few months, we'll know what damage has really been done. And if there has been enough damage, then perhaps the SEC can make a case.
So, Amy, there are reports that some brokerages are basically saying we're not going to clear any trades for the time being. or at least we're going to really curtail it. Do they have the authority to do that?
Well, there are rules and regulations around the exchange activity, and there are trading halt limits up and down, for example. Brokerages, that one is yet to be seen.
So what other possible damage could be done to the marketplace overall? We now hear other stocks are getting caught up in this. There are, I don't know, maybe as many as 20. They've been stopping trading today on this. What other damage could be done to the marketplace overall, apart from the damage clearly being done to some short sellers?
Well, we'll see how it plays out, like I said, but there's no basis in fact for the movement in these issuers. So unfortunately, if this begins or it has taken off, if this continues to move and have such market momentum for, not just a small handful, but if it becomes a growing phenomenon, then you're going to have a bubble that bursts because it has no legs. This will all come to an end, and it'll come to a tumultuous end, and we'll see some huge sell-off happening very soon.
An extraordinary story. Thank you so much, Amy, for being with us to explain it to us. That's Amy Lynch. She's founder and president of Frontline Compliance. Coming up, President Biden's vaccine supply is falling short of demand. We'll discuss those supply chain issues with Jay McHarg. He is CEO of Aerosafe Global. That's the company that makes cold storage boxes. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Some breaking news crossing the Bloomberg right now. UniCredit has officially named André Orchel as CEO, replacing Jean-Pierre Moustier. This is not unexpected. It was expected that the investment banker, the deal maker, would succeed to the top spot, but now it has become official. Once again, UniCredit naming Mr. Orchel to be the new CEO. In the meantime, we want to get Bloomberg First Word News, and for that we go to Mark Crumpton.
David, thank you very much. The Centers for Disease Control and Prevention says the United States could have as many as 514,000 COVID-19 related deaths by February 20th. The government also says it's making more medical professionals available to administer vaccinations around the country. The United States leads the world with 25.4 million confirmed cases and more than 425,000 deaths. We're getting word on the Bloomberg that France is holding off on a new lockdown, and there are worries about unrest. We'll continue to follow that story. We'll have more details as they become available. We're also hearing that the government says that President Emmanuel Macron has asked for some guidance on that, an analysis, before he makes a decision about new restrictions. A top official says there's also a risk of civil disobedience in France if a new lockdown is imposed. NATO will emerge strengthened with Joe Biden as president. That today from the alliance's Secretary General Jens Stoltenberg. He spoke with Bloomberg.
Now with the new Biden administration, there will be a new chapter in the transatlantic relationship in the cooperation between North America and Europe. And a strong NATO is good for Europe, but it's also good for the United States, not least in addressing the security consequences of the rise of China.
President Biden said yesterday he, quote, strongly affirmed the U.S. commitment to the NATO alliance's collective defense. Iranian and Taliban officials are accusing the United States of provoking war in Afghanistan. They met in Tehran today and said the U.S. strategy supports, quote, the continuation of war and bloodshed. The U.S. signed a peace agreement with the Taliban last February and met its goal this month of reducing the number of troops in Afghanistan to about 2,500. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. President Biden says the U.S. government is buying another 200 million doses of the Pfizer and Moderna vaccines, both of which require special handling, with the Pfizer version in particular requiring extreme refrigeration. We welcome now someone in the middle of the so-called cold chain industry. He is Jay McHarg. He's CEO of Aerosafe Global. So welcome. It's good to have you, Mr. McHarg. Give us a sense of your understanding of that chain from production right through to distribution. Where are the weak links right now for vaccine?
Well, actually, first I have to say it's been a fantastic job working with the vaccines, Pfizer, Moderna, outstanding work in getting this out and the speed they did. I think that there's a few unique challenges to this vaccine distribution. The first one being the temperature, as you mentioned. And it's not that this industry hasn't been doing it for some time, but they haven't done it that well. In fact, billions of vaccines were lost last year due to temperature fluctuations. But I think that they're doing it right this time. The -20 and the -70 is not unique to the industry. There are methods and techniques and packaging and logistics solutions that can provide that. And so it's just unfamiliar to most of the public. And asking the pharmacies and asking the states to deal with these new challenges was the original hurdle. But I'm here to say that I'm working with all of them. And it's very encouraging. We have figured it out. I think the quality is there, the speed is there. The efficiency may not be today, but I'm very encouraged with President Biden's message the other day that he's investing in more sites, more pharmacies, getting the product out to rural areas. So I'm encouraged with the progress so far.
Do we have the equipment and or the products that we need in order to do what we need to do? Is there a bottleneck there that we need to manufacture, I don't know, more special refrigerators or more of these containers that contain dry ice?
Actually, I don't think so. The capacity is being built and most of it exists to handle most of this. I just think it's a coordination issue. I do think that with more sites, they can handle more product. The packaging and logistics solutions that exist today very efficiently and effectively deliver the vaccines, whether it be Pfizer or Moderna, to the pharmacies and vaccination sites. And an original challenge was, how do we do last mile? How do we get it out of the pharmacies? And again, with the help of the industry, the pharmacists now have solutions where they can hit the street, go on these milk runs, or even get in a car and drive 6, 8, 10 hours and deliver vaccine to the remote areas.
So take us behind the scenes, if you would, in the private-public sort of interface. To what extent is the federal government really calling the shots, state governments calling the shots, private industry really partnering? Who really is in charge at this point? Is that clear?
Everybody's sort of working on their own solutions. As you know, Pfizer took more of a direct approach, which could be seen as less risky to go straight to distribution sites. Moderna went through McKesson, which is obviously a nice choice. McKesson being a very established organization, more handoffs, more distributed. So I don't know which one's better. They both seem to be working, but there is a little bit of confusion when you get down to the state and the county level versus the pharmacies and the federal government level. But so more coordination would be nice. I think that will help accelerate the distribution of the vaccines.
Have you seen much change or shift so far with the Biden administration coming in? I mean, they've only been there a few days, but they're certainly having a lot of press conferences and talking about it, seem to have a plan.
I haven't seen it yet. I like what I'm hearing, but I haven't seen anything personally on the street yet.
So if you were advising them, if you were advising the White House right now and saying, okay, if you really want to get this done the way you say you do, this is the thing you got to focus on first and foremost, what would it be?
I think having more sites for the product to be delivered to. I think that would be number one, and coordinating between the sites. Like I said, the pharmacies are already doing it. Some of the states are doing a pretty good job. Some are still trying to figure it out. So laying out a roadmap of what's working best practices. And again, I point to the pharmacies as leading the charge as far as getting it into patients' arms quickly.
What about internationally? Are there things we can learn from things being done overseas, or vice versa, that we can help other countries?
I think we're leading the world in our efforts to vaccinate. I think the numbers prove it. Europe is just getting started. Japan will be launching in a few weeks, and that looks promising. Again, basically because they're following the U.S. model.
Fascinating. Can you give us a sense of, just briefly here at the end, of what how your company fits into this chain?
We provide solutions custom for farmers' needs. And so this is no different, whether it's developing a solution that'll last 10 days to hold -70 or -20 for primary distribution, or helping the pharmacy store that product with dry ice that they were unfamiliar with, or helping last mile. So whether it's 1,000 doses or 10 doses, we want to help whoever it is get the product to the patient as soon as possible.
We've got over 300 million doses to get out there. How important are going to be those big chains of pharmacies?
I think they're going to be hugely important. I do think the states will also play a big role, and the counties. And I actually think, 1 million a day, obviously we're doing it. I think we could get up to 2 to 3 quite easily.
Fascinating. Are more resources needed?
I don't think so. I think it's just more coordination.
Fascinating. Okay, thank you very much. It was really interesting. That is the president and CEO of Aerosafe Global. He is Jay McHarg. Coming up, a member of President Biden's Council of Economic Advisors, Jared Bernstein, on the president's Buy America initiative. That's coming up on Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. I spoke earlier today with longtime Biden advisor Jared Bernstein, now a member of the Council of Economic Advisors. He explained why President Biden is expanding on one of President Trump's policies, that is the requirement that the U.S. buy American.
It is very much in the interest of the American workforce to have that procurement be as domestic as it possibly can. I say that based on everything we've discussed so far. I mean, I would say very much the same thing even in good times, because we know that there are many communities that have been really gutted by the loss of manufacturing employment and the downsides of globalization. But I'll particularly say it in a moment like this. And by the way, and this is where Trump's trade policy I thought was very ineffective, even before this crisis, our manufacturing sector was in recession. So we've had difficulties in that sector for a long time. Now, I've talked about this issue a lot. It's, as he said, it's been a big part of my research, and it's dear to my heart, because it's another dual-edged sword, like many other things we've been talking about today. Globalization is, of course, a very powerful and positive force. And by globalization in this context, I'm talking about trade flows. Expanded trade flows are an important and useful source of supply, source of employment, source of holding down price pressures throughout the globe. But on the other side, those trade flows have caused concentrated and persistent pain, suffering, with even political consequences in places throughout this country. And I think we all know the kinds of places we're talking about. And I think, while this has been a long-term interest of Joe Biden, politicians from the left and right haven't done enough to address this problem. And one way they've let this slip is by ignoring Buy American rules. We've had these rules on the books for decades, but they have been summarily ignored. They're fraught with loopholes and waivers, and I can go through the details, but the executive order not only sets up an office within a senior person within the Office of Management and Budget to oversee closing these loopholes, rationalizing these waivers, standardizing the way we do this, but making sure that this is an administration-wide push, that agencies don't have an ad hoc approach to this, and that finally we're providing our factory workers, those in export-sensitive and tradable sectors, with some opportunities that they need when we're spending taxpayer dollars to procure American goods.
So I can fully understand how this could protect the jobs of some workers, protect even the manufacturing industry. But as a matter of economics, does it just work as a tax, much like a tariff? You referred to former President Trump. President Trump actually liked Buy America, didn't he? Isn't this an extension of what President Trump was doing?
I think the problem with what President Trump was doing is that it didn't work. And one of the reasons it didn't work was because he didn't take the systematic process that we articulate in the executive order. So I'll give you a couple of examples. There's domestic content rules, and you probably heard President Trump talk about this. There's never been a consistent rule about what domestic content really is, what those requirements are supposed to be. So it becomes a complete moving target with a threshold that federal procurement officers just have no useful guidance. Same thing with the kinds of waivers that countries get based on price and based on favorable treatment. That's just been wide open to the point where it's completely fraught with loopholes and routinely abused, and this was the case in the prior administration. So, it's one thing to talk about Buy American, it's another to set up a process to actually do it. Now, you asked an economics point, which is important. Here's something I think people don't know. When it comes to comparing us with all of our trading partners in the advanced economies and developing economies as well, they already do this. We are a laggard, okay? They have the ability to bid on our contracts way more than we do on their contracts. So I think on the economics, what we're really talking about here is a level playing field.
That was part of my interview with White House economist Jared Bernstein. And tune into live coverage of the Fed decision and Chairman Powell's news conference. That's coming up at 2 p.m. Eastern Time today. Coming up here, Balance of Power is going to continue on Bloomberg Radio. In our second hour, we'll talk to Michael Girard of Columbia about the climate-related executive orders President Biden is due to sign next hour. This is Balance of Power on Bloomberg Television and on radio.